Good afternoon. Welcome. I hear it's a day of recovery, but a lot of stock-specific action that we are tracking. Epigral, that's doing well in trade after reporting a strong set of Q1 numbers. Revenue jumped by 43%, margins expanded as well. To discuss this and more, we have Maulik Patel, the chairman and MD, Epigral, joining us now. Maulik, good afternoon. Thank you so much for joining us. But you've indicated that a lot of it was also led by newer capacities coming on stream, better volumes. So I wanted to understand how much of this growth can we cater to the growth that you've seen because of additional capacities? How much of it was because of original capacities? And are you seeing that improvement in demand and pricing as well on a quarter-on-quarter and on a YOY basis?
Yeah, last year was very down for the chemical industry. So we have seen many changes is happening. Specifically, globally the situation is improving, but domestically all the chemical consumption is growing much faster than others. Like what we have expanded our capacity in terms of the CPVC and the CPVC compound and the epichlorohydrin capacity which we have started last year. That is the local consumption has increased, and because of that I think our revenue is also increasing, and the volume growth which we have done this year on YOY basis 29% and the quarter-on-quarter basis 14%, and we expect this year the volume growth we are able to maintain 15 to 20% because of the year-on-year expansion which we are doing continuously.
Maulik, so 15% volume growth for FY25. Along with that, can you also help us with the guidance for for top line EBITDA margins as well as the bottom line?
Yeah, top line and EBITDA, it's difficult to give a guidance, but I think current situation it is not going to be major change in terms of the crude oil prices and the raw material and the energy situations, except the logistics challenges which the country is facing in last 3-4 months. It is going to be easy in the coming quarters. That's what we are expecting, and it is not going to be major effect in terms of the raw material prices also. So 15-20% I think continuously we are going to grow in terms of the volume, and the revenue probably we will achieve probably 2,400 to 2,500 CR in end of this financial year.
Okay, so I wanted to understand the pricing scenario. You did say the demand is improving. Yesterday, SRF on its conference call indicated that pricing recovery is still far away. There's no clarity on that. Is this something that is happening with your industry as well? And in that case, will this growth be largely led by volumes this year?
Yes, that is right. The price recovery, I think it will take time, and I think the 2023 financial year was is a bit low for the chemical industry. But I think the price if you compare only the 2023, yeah, it is going to improve a bit going forward. Looking at the domestic consumption and the global consumption is going to improve, and export also volume will increase for the chemical industry. So we are expecting the price will increase, but not to the tune of 2022 and 2021 level.
Okay. Maulik, just give us a sense of this new value chain facility that you have for chlorotoluene. What will volume growth look like from there in Q2, and what is the target that you've set for FY25?
Yeah. The major project which we are going to commission in the coming quarters is a chlorotoluene as a part of the specialty and the derivative segment. And the volume will realize in terms of the revenue from Q4 onwards, because these are the specialty chemicals. So once we commission, I think it will take a couple of months for the approval of the customers. And I think Q4 and the next year actual revenue will be contributed from the chlorotoluene business.
So is the peak capex for the company over now, Maulik? Because you've done a lot of commissioning already. Now this chlorotoluene plant will be commissioned. And what does it do to your debt? The net debt to equity is reduced, but what's the absolute debt number that you're sitting on?
So net debt is our debt to EBITDA. If you consider the past trailing 12 months is 1.6, and in absolute terms it is including working capital, it is around 925 crore. And going forward also we are going to strengthen, and our capex is going to be more towards the domestic consumption and the import substitute. And we are going to continue our capex in the future also. So in absolute terms, I don't think so we are going to increase much difference in terms of the debt, but overall balance sheet and the ratios will improve as our revenue will grow from the new capex going forward.
Okay. Thank you so much for that, Maulik. Today that's all the time we have, to speak to you today, but we'll get you once again, once some of the new capacity that you spoke about come on stream. Let's now slip into a short break. On the other side, we will connect with Amit Jigran, the MD and CEO of SBI Life Insurance, to discuss their Q1 performance. Welcome back to Midcap Radar. Let's now shift our focus to SBI Life, which recently reported its Q1 numbers. New business premium surged 13% on a year-on-year basis, while total AP and retail AP grew over 20%. My colleague Yesh Jain spoke to Amit Jigran, the MD and CEO at SBI Life Insurance, and began by asking him about his AP outlook for FY25. Let's listen in.
First quarter growth for the entire insurance industry, as the numbers are coming out, has been pretty good. And on the same lines, at SBI Life also, we have a pretty decent quarter with 20% AP growth, as you said. During the quarter, our agency had a wonderful growth, and that is the area that we are focusing upon in this financial year. And the agency growth was plus 40%, 46% to be exact. So this year we have taken this target that we will tap the opportunities that are available in the agency segment by opening more number of branches, employing more agents, improving the agent productivity, and in the remaining 3 quarters also, with the seasonality that you have seen in SBI Life in the past years, we are sure that the kind of growth that we provided guidance for after the last year's result and the first quarter growth is expected to continue.
Okay, so about 20% growth on the AP thereabouts for FY25.
Yeah.
I want to speak to you a little about the value of new business. That, of course, sort of came down as against the street estimates. That's because the margins also receded a little. What I want to understand from you, for the year, do you expect, if let's say the AP you expect for FY25 to grow at 20%, what kind of growth do you expect in terms of your value of new business? Since you've already said that your margins are expected to trend upwards from here, then in that situation, AP growing at 20%, what could be the growth in VNB?
See, you are aware that VNB and VNB margin are a play of the product mix. At SBI Life and in the entire industry, you would have seen that ULIPs are flavor of the market, and that is natural also because the customers, when they are seeing very good returns on the equity side, they are naturally tending to buy more of the ULIPs.
Correct.
That is what the story was in the SBI Life also, and our ULIP sales were a little higher. That affected the VNB margin a bit. The other side was that the yields are coming down in the government bond market also, and we did not reprice our product in the last quarter depending on the yield that we are getting from. So that also affected the overall margin to a certain extent.
Correct.
Going forward, as we are focusing on the protection segment, and we are launching some new products also in protection, and the repricing of the non-par products, we are sure that the guidance that we earlier provided for the margin to be range bound around 28, we are pretty sure that we will be sticking to.
Well, a very interesting conversation with SBI Life Insurance. The stock doing quite well after it reported a strong set of Q1 results. But that's all the time we have on this edition of Midcap Radar, Mutual Fund Corner, when we return.